The markets, that jobs report from the morning, the Dow, the S&P, the Nasdaq hitting all-time highs again, third day in a row today. The December jobs data did show unemployment staying at that 17-year low, 4.1%. Wages up, by the way, 2.5% since last year, so there was wage growth there. But is all the good news being ignored by the mainstream media as they obsess over the book? Let's bring in Heritage Capital President Paul Schatz, Paul, of course, the Michael Wolff book that we've been talking about over the last few moments, and that every mainstream media network publication has been completely obsessed about, every single detail. Are we forgetting about the great market? We're forgetting about jobs.
Like most of these things since Trump got elected, they have a very short shelf life. The media will be hyper-focused on it. Listen, today's Friday, so the media will focus on it today, probably over the weekend, and then next week they'll be on to something else. What Trump did, what Trump didn't, was the table set properly at Camp David? Bottom line is, since Trump got elected, whether you want to credit Trump or Paul Ryan or Mitch McConnell or a combination, animal spirits have been released. The economy, after 3 years of slogging along with tax increases, the economy is finally kicking it up a notch. Clearly, the markets, they were doing well under Obama. They're doing a whole lot better under Trump. Things are pretty darn good in the country right now. The media is going to do their best because it's only, 3 quarters left till the midterms, but it's not until November. So I think focus on what's in front of us. Jobs are good, economy's good, earnings are going to be very good with companies, and the market's doing fantastically well.
And it's interesting, too, because I mentioned a couple of months ago, we did see a 2.5% increase in wage growth. And you also saw where we really saw the weakness and why the report really missed expectations was the retail sector. That's the Amazon effect. Those are those retail jobs. That's where the weakness has been. But overall, you say that even though the report wasn't gangbusters this morning, that's good for stocks. What do you mean?
This is the Goldilocks scenario right now. It's not too hot. It's not too cold. The Fed has been very clear. They want to have a shallow glide path on interest rate hikes. This allows them to continue with that at most 1 per quarter interest rate hike in 2018. So maybe they do 3 this year. Everyone I have read, and I believe the same thing, 2 to 4 rate hikes this year. I lean towards the 4 than the 3 or the 2. But this is the perfect economy right now. Inflation it's not where they want it to be, but it's fine. Wage growth is kind of staying. The genie's in the bottle. We're not seeing 3.5%, 4%. And listen, people are going to ignore, especially the media. African-American unemployment is at the lowest level since records have been kept. So for all that huff and puff from the media that Trump's ignoring minorities, the proof's in the pudding. That is fact. You can't argue with that.
That's really interesting, Paul. That's a great way to end it with you. And obviously, again, let's not forget we've still got another new intraday record on the Dow and potentially another record close tonight. So it keeps on rolling no matter what the naysayers keep saying.
Yeah,
Paul,
I think you still have a shot at having this mini melt-up in the market. I wouldn't root for it because I think it doesn't end well, but people are throwing in finally. They didn't throw in at 15 or 18 or 20,000. People are finally throwing into the market. So in the short term, it's all going to be really good.
Paul, thank you very much. I appreciate the enthusiasm.
Thanks for having me. Have a great weekend.
You too.